So I was looking at this electronic arts, and this thing really caught my eye. And I had this massive sell-off yesterday. And notice how this, I mean, at least for now, the sell-off has stopped. It's pretty much unchanged in the pre-market. Now, it's not a coincidence that this is where the stock found support. Stocks tend to find support at price levels that had been support or resistance before. If we go back here to September of 23 and August of 23, you can see support is at the same level. I mean, it's like to within $1 of it, right? So you get this big sell-off, and where does it end, right? The price level that had been support before. What also catches my attention here, which makes it kind of, really makes it kind of stick out, is look how much volume traded.
Yeah.
I mean, it's huge. If we go back, it was kind of close there, but we got to go all the way back to 2019 until we had a day with that much volume. Now, what does this mean? Well, this is what we sometimes call I should say it could be, because who knows, this thing could keep going down. But what happens is the people that want to sell are waiting for it to get a better price, right? They're just watching it go lower. Now, like say I was back in my institutional days and I was handling a big order. Say I had 100,000 shares of this to sell. And I got the order when it was around 150. And it's like, all right, well, I'll sell 10,000 here, or, hypothetically, this is something that could happen. I'll sell 10,000 at 150. I got 90 left. I'll wait to see if I get a bounce, so I get a better price. But you don't get that bounce, and it goes down to say 145. And it's like, oh, all right, I'll sell another 10,000. So now you're done on 20. You leave 80. You wait for it to come up, but it doesn't, and it keeps going down. Then you sell another 10. Finally, you get so sick of it and say, you know what? I leave 70,000 shares. I'm going to just tell my broker, just sell these things at any price. I don't care. Make it go away is a very common expression in the trading world. So you get all these people just dumping their shares, which results in these massive amounts of volume trading. Now, if it turns out that the news wasn't as bad as people initially thought and buyers start coming into the market, what's going to happen? They're going to have a hard time finding someone to buy the shares from because the sellers threw in the towel. The sellers are all gone. The sellers sold and now they're out of the market. So in order to draw sellers back in, the buyers are going to need to pay premiums and outbid each other. So when you gap down, like we just saw, if you get a fast move going down one way and you return to those price levels going the other way, you could get a fast move right back through them. Now, I wouldn't say that this is a trade yet. I would say that this stock is what we call setup. In other words, we're at the race, we're at the starters line, and the starters like, on your mark, get ready, get set, but they haven't said go yet. Now, what could be a go signal or a go trigger? Maybe a trigger could be, all right, if the RSI line starts to head north, that's when I jump in. If you're a little bit more conservative, you could say, all right, if the RSI line gets back above this red line, that's where I jump in. Because just because something is oversold and at support, it doesn't mean it can't keep going down. So what we do is we just sacrifice a couple points and say, hey, I'm not going to get the exact bottom here. Maybe I buy it if it's up $2 or $3 from where it is, and I don't care because this is not about being exact. It's about making money. And you have your trigger, so you're not guessing. In not every, but in a lot of trading models, you have your setup and then your trigger. And of course, you got to have your exit strategy too, which would be, all right, say this does get up to say 121 and the RSI starts to head up and that's where we jump in and buy it. You could say, all right, well, I'm in. My target's going to be up here around 140 because I know things can move rapidly through areas that there were gaps. But my target for a loss is going to be if this thing drops back down to say 118 where it is now. I'm just going to say, you know what, maybe it's not time yet. I'm going to just take a small loss. I'm not going to take it off my radar screen. But whenever you get into something, you should know how you're going to get out of it. I mean, that sounds very elementary, but a lot of people don't really think about it. So you got your strategy for a loss, your strategy for your target profit, and then you put in some kind of trailing stop if it starts going higher. For instance, say we start to trend up. You could say, all right, we're up to 125, we're up to 127. I'm going to put in this uptrend line, and if EA crosses the uptrend line, I'm going to just take my profits there. I'm going to get stopped out for a profit. That's one of the great things about using stop outs is you could be wrong and you could still make money. In other words, you could say, all right, well, I think it's going to get to 140. I think this gap is going to refill. But maybe it just gets to 130 and then it crosses and it goes back down. Well, you were wrong because it didn't go to 140, but you still made money on the trade because you got out around 130. So exit for your profit, your target, initial stop out plan, and then trailing stop plan. Some people use points. If it reverses by 2 points, that's when I get out.
Mm-hmm.
People use percentages. If it reverses by 2%, that's when I get out. Some people use the trend line. It doesn't really matter. You got to figure out what kind of works for you and fits your personality. So I think this is a pretty interesting stock right now. And I mean, when things get to these important price levels, they tend not to hang out there too long. Maybe a day or two or three or four, but I would be very surprised at this time next week if this stock is trading around $118. It's either going to be significant, meaningfully lower or meaningfully higher. So another strategy you could have is if you're an options trader, you look at this strategy where you'd buy calls and puts, right? The collar or
butterfly, which I believe we actually did on EA here.